Welcome to Frankly Speaking, the podcast on responsible business from Frank Bold, the European Public Interest law firm. I'm Richard Howitt, and after many years leading debates about responsible business inside the European Parliament, I'll lead our discussions about corporate sustainability, sustainable finance, business and human rights. Today, as the end game for the EU Omnibus of Sustainability... Start that again. Today, as the endgame for the EU Omnibus of Sustainability laws is playing out, we look at the extraterritorial impact of the laws and how that has been subject to some of the hottest lobbying, in particular from the United States. My guides to discuss this are one of the original parliamentary sherpas for the Corporate Sustainability Due Diligence Directive and who has now co-authored a book on the directive, Abrial Gilbert-d'Halluin. Abrial, welcome to Frankly Speaking.
Hello, Richard. Very happy to be here.
And a warm welcome to Professor Michael Mehling, Deputy Director of the Centre for Energy and Environmental Policy Research at Massachusetts Institute of Technology, MIT. Welcome, Michael.
Pleasure to be with you.
Now, first, Abrial, many of our audience will know this, but could you just start off by summarising how these EU sustainability laws apply to companies outside of Europe and why you think that this is so important?
Yes, of course. When the so-called extraterritorial reach of the Corporate Sustainability Reporting Directive was introduced, there was a very broad majority across the political board, from the left groups to the far right. The idea was to ensure a level playing field between regulations in place in Europe and the same applying for companies having substantial businesses in the EU, going back to the general objective of the directive, which was to limit the abuses on environmental or human rights impacts across the value chain. So there was this idea that it was really important to avoid that if you place a holding company outside of the EU, you would not have to apply the same rules.
That makes it sound very straightforward, simple, non-controversial, and yet there's been this huge set of arguments going on about it. So why suddenly is this subject to such a heated debate?
I think it came differently across geographies. Some geographies, like China, for instance, started to follow the EU by implementing their own rules. And it was a direct consequence of this extraterritorial reach of the EU regulation. While at the same time, what we saw in the US, for instance, was a clear fear that the positive effects on the sustainable business would spread off to businesses in the US. And the starting point to me was the whole debate about the Security Exchange Committee draft bill on imposing scope 1, 2, and 3 on greenhouse gas emission reduction for their own US companies. And so some vested interests were fairly against already the environmental disclosures of their activities, and in particular, not only on financial, but also on the impact of their businesses on the outside world, started to build strong coalitions to kill the extraterritorial reach of the European regulation. So by the fear that this would be a snowball, if you wish. So from that moment on, you could see very powerful interests. So of course, the fossil fuel industries, but not only, joined by very large fiscal entities, banks or asset managers, to try to find the right proxies in Europe, but also directly lobbying to undermine this particular element of the rule.
Okay, there are a number of questions about that I think we need to come back to, but I do want to bring Michael in at this stage. We've seen the US Chamber of Commerce, Republicans in Congress, individual US corporates, all raising issue about the so-called unacceptability of these directives. So without wanting to ask you about the detail of the directives, much more about the perspective and impression that there is in the United States about this, what does that look like from the other side of the Atlantic?
Richard, so you could look back into history. I mean, the transatlantic relations, for all the cultural, political, economic, etc., ties that we have always been fraught around issues of regulation that affect companies on the other side of the pond, right? Um, Whether you go back 10, 15 years, and it's important to emphasize it's not just Republicans. The current administration, of course, is particularly extreme in looking to deregulate and roll back. And that just increases sort of the delta between the regulatory scrutiny and compliance obligations US companies face. For instance, if the greenhouse gas reporting rule is rolled back as the administration intends, the SEC rule on non-financial disclosures is, of course, already history. So when you have that bigger delta, right, the extraterritorial effects of rules adopted in the EU seem even more onerous. But I want to emphasize, even during much friendlier administrations like the Obama administration, both sides of the political spectrum organized heavy resistance against the EU ETS inclusion of international aviation. And President Obama signed the EU ETS Prohibition Act, right? His Secretary of Transportation shepherded that legislation preventing US airlines from complying with an EU rule. So we have that in many contexts, financial disclosures and Sarbanes-Oxley on the US side. We have that with auditing companies, especially the Sarbanes-Oxley that I just mentioned. We have that with chemicals, REACH. So there's many other examples, and I feel like the U.S. in particular is really sensitive to being told by another jurisdiction of what should be done. And again, it's not just a partisan issue. It seems to me more of a bipartisan kind of allergy by being told by the old continent, so to speak, what the right corporate behavior is. But of course, there's absolutely, as Abrial says, there's very hard-nosed financial economic interests, and anybody who knows, I live in the Washington Beltway, who knows how lobbying works in Washington. I'm not surprised that they would use all their tricks and all their, not tricks, but all their strategies to influence a legislative file like this in a very professional, cost-intensive, and in some cases, of course, also effective way.
And I know that in your work you also have looked at the carbon border adjustment mechanism from Europe and how that might impact the US and what the response in the US is. Would you give us your guide specifically to how that's playing out?
It falls, I think, in the same thrust of current trade negotiations, the current economic and trade sensitivities, but also there's a lot more, right? There's an evolving global geopolitical order, a disintegration of the previous rules-based order. We're watching it, witnessing it in real time. And so the US is throwing this into, it's on the table essentially. If you want to continue having trade relations with the US, if you want to continue benefiting from our disproportionate, military expenditures, et cetera, in NATO and so on, we expect you to make concessions, and CBAM is squarely in there. You can see it in the framework, the arrangement or this sort of preliminary agreement on a future reciprocal US-EU trade agreement, where both the CBAM and CSDDD and CSRD are mentioned. What exactly will happen is, of course, a big question. And as I think, I put it to you in a previous conversation when we were talking ahead of this, it's really sort of, I feel like a showdown between the Brussels effect with the EU looking to kind of globalize a much denser, much more sophisticated landscape or mesh of corporate obligations through a number of different legislative acts versus the US currently much more deregulatory and sort of trying to prevent that, and in fact pushing for global consumption of fossil fuels, all of which, of course, aligns very much with the unique economic circumstances of both regions, which are vastly different in this regard. It's more complex than that, but I would say, it's really kind of coming up as a showdown of different paradigms.
And of course, you are right to say that even under the Biden administration, the government spoke out against the Corporate Sustainability Due Diligence Directive from Europe. So I think you make a very fair point there. So, Abrial, you've heard that America has got just as much right to decide its own trade interests as anyone else, and they're going to use their powers to be able to do so. The current administration has rejected the proposed SEC climate guidance obligations on companies, and doesn't want that imposed through the back door by Europe. How do European interests respond to those arguments?
So I kind of agree with the difference of leading business in some extent from both sides of the Atlantics. One has to understand as well that during the previous mandate, there was a clear majority to avoid the past trauma of having foreign legislations being imposed de facto to the European regulatory system. I can name the EFRS standards for economic reporting. And the idea was really for Europe to take back control, if I can use this expression. And then the globalization that you're mentioning came as a second priority. First, it was to make sure that the vision is aligned with the legislative vehicles, and then there was a globalization. What we see today is the sovereign element remains, but as you mentioned, the way it is presented now and afforded by the administration, blackmailing not only on the question of environment or economic, but also on defense, because this is what's happening now is I will remove 20 soldiers from Germany or you scrap CSDDD. If you continue with CBAM, you will see I will raise my tariffs. This is simple blackmailing. And this is endangering the very sovereignty of the European regulatory system. Now, what we see from the Commission is we are in a moment of extreme tensions. The biggest European economy, starting with Germany, has faced two external deep economic shocks: the war in Ukraine and the US tariffs. So, of course, there is a way to see how we can appease the tension with the economic world, but also to try to slow down the attacks from the US counterpart, or I would hope still partners in those discussions. And this has concrete effects on the European legislative agenda.
You made the case for sovereignty and European sovereignty, but couldn't the Americans say, you get on and regulate your companies however you wish to, but you don't have a right to regulate for our companies? How do you respond to that?
So there are different levels here. First, a lot of so-called non-European companies in the scope of the CSRD had either subsidiaries or they were listed on capital markets, and they still are. So the moment they have to apply rules when you are listed on capital markets, it's exactly the same thing for sustainability issues. Then you have non-European companies doing direct business without any subsidiary entity in Europe, but having a branch with a very substantial amount of business. We are talking of 150 million a year during 2 consecutive years. Now we are raising the threshold probably around 450 million. So when we're talking about direct exports, which are relatively substantial, with an entity which is a branch, so it's not completely out of the regulatory system. So it's not really regulating companies outside, but the entity which makes business or is deeply under control of the business which under the EU market. So the EU has the right to make its own rules. And I could use many examples on safety, for instance, where no one complained. But here we're changing the paradigm. And there is this fear of that it's spreading and completely change the way we're making business and we address the impacts of the company itself. The company would not only have to make profits and suffer from the losses, but to start changing its own role in this overall sustainability transition. And these many interests don't want that in the US, but also outside.
And of course, no one has to trade with Europe. This applies to companies with a presence or a specific turnover trading with Europe. And I think that's the simplest and best argument from the European point of view. Now, Michael, in the EU-US trade agreement signed off famously at the Scottish golf course Gleneagles in rather bizarre circumstances in the summer, the text says in relation to the Corporate Sustainability Due Diligence Directive, quote, does not pose undue restrictions on transatlantic trade, unquote. That's a very vague, very general clause, very difficult to enforce, I would argue. So a lot, I think, depends on how the Americans interpret that and what's going to be a bar high enough or low enough that's going to be able to meet their expectations and needs. You know, where do you think this stands on the priority list for the administration, and how easy or not will it be for the Europeans to meet that expectation from the US?
It's a nice example of constructive ambiguity, right? They chose wording that kind of allows both sides to save face vis-a-vis domestic constituencies and the domestic politics. I mean, coming back to the previous questions that we were discussing, I personally really feel like there is no black and white, right? It's, as I was arguing earlier, there's not one side that is unique in trying to prevent the other from adopting rules that have some sort of implications for foreign entities. And it really is, as Abrial was just saying, there seems to be a certain threshold and certain thematic contexts which are particularly sensitive for the other side. I mean, European financial institutions were quite organized against the FATCA reporting rules that require, if you have any US citizen having bank accounts, investments, etc., reporting a lot of information to the IRS, and if they fail, paying hefty fines. I mentioned the Sarbanes-Oxley Act before regarding cloud, criminal justice, the US Cloud Act that would require data on US citizens that are suspected of being criminals, but stored on EU servers of US companies, Microsoft, etc., to being where then the EU says, oh, but this violates GDPR. It goes both ways, right? And each side has sort of the things where it says, oh, but this is really a step too far. Here we have to intervene. Otherwise, as Abrial rightly says, it's perfectly recognized that to be able to access a different market, say on security, electrical appliances and the CE certifications, you have to do that. There's no question that that's perfectly accepted. So it's an interesting dynamic that this sort of really triggered sensitivities. And I would argue that it's probably higher up on the list than many of us expected a couple of years ago. The fact that it is mentioned in that arrangement, in that statement that you just cited, the fact that it was included in the letter that Secretary Wright, the energy secretary in the US, and his Qatari counterpart sent to the EU saying, careful, you're risking, access to liquefied natural gas supplies if you have these onerous rules, suggests that it is important. But I still think, the EU is a strong and experienced negotiator, that they chose this wording very carefully in order to maybe allow arguing that, well, we have the omnibus, we have simplification, we've made changes, so isn't that enough? It may not be the end of the back and forth, right? And as Abrial will probably agree, the EU legislative process is very formal. It's not something where the commander-in-chief wakes up one morning and today I want to achieve this, or I've changed my view, we're going to hit them that way. It is more formal. And so it's much more difficult, I think, for the EU to negotiate in this kind of unpredictable, nimble way, tit for tat, that the US is engaging in right now, which is quite unique to the US political system and very different from the EU sort of, Brussels and member states division of power.
So, Abrial, having heard that answer, the European Commission has signed up to that wording. How do you think that they're going to deliver on their side of the bargain? And just to say to the audience, Abrial still works in the European Parliament, so you're very close to what MEPs are thinking and saying in response to this. So how would you predict that the Europeans will respond to that pressure, specifically on the extraterritorial dimension, of course?
Well, first, I'd like to say that I'm not putting all companies in the same bag. You have many, many big economic players who really try to comply, and we know that it was extremely difficult, even though the extraterritorial reach had not started yet, because it was due from 2028 onwards, different from those who were, of course, listed on the capital markets. For them, it was much quicker already from the first year. Now we have the Omnibus. It's going towards the end. I was this morning listening to the Commissioner Albuquerque, European Commissioner, in charge of those two important files, which are CSRD and the due diligence directive. And they said they hope it will be concluded on the 10th. And I think that when it comes to including so-called non-EU companies within the scope, there won't be any revolution. The scope will be increased. You will have less companies with HQ outside Europe in the scope, but this level playing field between EU and non-EU company will remain. Now there are other elements which were a bit very, very difficult for those companies because of the differences of regimes. I can name the compulsory climate transition plans of the due diligence directive, with scope 3 included in this mandatory adoption of a climate plan. I can name the way civil liability imposes this obligation of means, which is very different from the way you have court cases in the US. So I can understand there were difficulties, and I think that substantial changes have been introduced to the CSRD and the CSDDD, and if it's not enough for those who still yell from outside Europe, then I'm not sure what else could be done apart from completely removing non-EU company from the scope. But then European companies will not be happy because of the lack of the level playing field. And European regulators should first, I think about the economic prosperity of their own, or at least of the companies with strong interest in Europe.
I agree with you that I think it's highly unlikely that European politicians backed up by European businesses will want to drop the clauses altogether, because that then takes away the complete motivation in the first place, which is to ensure a competitive level playing field for those in Europe. I do potentially see the guidance that needs to take place on the reporting, which is yet to be produced. I could see the European Commission delaying that. I could see them potentially making it very, very simple indeed, not to inflame US sentiment. So I could see those as possibilities down the line. And on climate transition plans, many people have said that was the real red flag to the Americans, and that's why there's been this move to remove climate transition plans for businesses altogether. We'll see. I don't think any of us know exactly what the outcome on that is going to be, but certainly there's been some US influence. On the guidance, do you have any comment?
The so-called guidance, which is actually a proper legislative act, it's secondary legislation, let's say a European decree, the delegated act, which should set the standards for foreign companies to report against, only on the impact side, by the way, so much more limited. And now we have simplified European sustainability reporting standards. So the ones for non-EU companies should be based also on this simplified version. So it's even less. The Commission is really trying to delay things. I think to show also their trade partners that there is no immediate threats on this. And the reality is, as long as this delegated act has not been published, the legal effect of having non-EU companies without any subsidiary in Europe in the scope to report on their impacts will not take place, because you need this to know what you are meant to report against.
And of course the timetable is in the primary legislation, so the Commission might be accused of breaking the law if they did delay. We shall see. Michael, I'm just back from the UN Forum on Business and Human Rights, where there were many US corporates present who are doing due diligence and believe in it. We're following up from COP30 in the weeks before, where there were many US corporates present who have net zero targets, who are part of the We're Still In movement that there is. Amongst business community in the United States, is there a healthy debate going on? As Abrial said earlier, that not all companies can or should be put in one bag. How does that look amongst the US business community?
Very much agree with Abrial. It's a very heterogeneous landscape. I wouldn't say the debate is healthy. It's definitely been muted. And there's fear, there's sort of a desire to remain under the radar screen. Unfortunately, there's also been quite a lot of companies that have backed off, postponed or weakened commitments that they had entered in what I think was a quite unique period of sort of progress on the earnestness with which corporations sought to increase visibly and demonstrably their commitments to decarbonization, sustainability, but also labor, human rights, etc. Say in the 2018-19 to 2022-23, when suddenly these geopolitical and competitiveness, economic and other things started coming up, and of course the politics, the domestic politics in the US in particular have dramatically changed, but Europe also is experiencing at least some call it a reset. I think that's too extreme, certainly for Europe. In the US it is a reset. So you can look at companies, and there are obviously those companies that have a much higher exposure to resource extraction or producing, processing, extracting highly carbon intensive or environmentally damaging products that will have a different view on this, and it affects their business differently than service providers. Now, interestingly, even in the tech sector, the energy consumption, the energy demand of some of the large, these 7 big companies, for instance, data centers, etc., cloud computing, has actually even made them go from what you would normally think for them it's easy to decarbonize, right? What's their scope 1, 2 footprint? But it's scope 3 that's really the problem for them. And increasingly, they actually even invest in their own infrastructure and generation assets. So that's why even there you've seen sort of a bit of a change of tune. Then again, to underscore that it is heterogeneous and it's not all just black. It's a very sort of gray kind of landscape. Some states at the sub-federal level still have very ambitious binding legislation, California, New York, Massachusetts. And even though there's, some discussion in those states about whether it should be slowed down or the pace cannot be kept up quite the same way, it's still a very different picture from the federal level. So you have this patchwork in the US, which means that you will automatically have a number of companies that face stricter compliance obligations, that know that no matter what happens in Washington, they still have to prepare, comply, whose customers, whose operations might also be more exposed to, or more interested in sustainability. And you have others where it's very different, and the jurisdiction, the politics, et cetera, are very different, the jurisdictional politics. So It's hard to sort of say there's a net. It's good, it's bad, I'd say it's very complicated, and it's hard for me to anticipate what the end result will be, but it certainly is nothing easy to predict.
And Abrial, I do want to ask you about that lobbying. Michael earlier said he's in the Washington Beltway and he knows all the tricks of the companies. And of course, there are more lobbyists registered in Brussels than there are in Washington. So the European Parliament and the EU institutions are very well aware of lobbying. But I find some of what I've seen and heard unprecedented. 16 attorneys general from Republican states writing to the big tech companies, Meta and Google and so on, saying that they should not cooperate with the CSDDD, the Protect USA Act, a bill brought into Congress saying that if US companies do comply with CSDDD, they'll break the law in America, so they can't win. They'll break the law in Europe or in America. It's a bizarre situation. And then in recent weeks, we've seen this leak of an intensive lobby group of 11 US headquartered companies, including Chevron, ExxonMobil, Hancock, who have taken part in many meetings in Strasbourg and with the EU, not all of which have been properly recorded according to the EU's lobbying rules. And in their strategy paper, those companies say that their aim is to, quote, divide and conquer, unquote, the different European countries. And they also say that it's their explicit aim to encourage the centre-right Christian Democrats to vote with the extremist far right. I find that very extreme coming from business, I have to say. Again, what's the reaction to that in the European Parliament? Do people share concerns about that, or do they just see it as part of normal business?
I would say it's even more cynical than this. Some of the fossil fuel companies you are mentioning have had a direct wish to undermine the regulations and push and told their partners, push as much as you can. But at the end of the day, we are anyway disengaging economically from Europe. So it's not even something that may, on the long term, directly impact the business, because you see also this disinvestment from the EU territory. So it's also idealistic, which may have led to the wording, surprising wording from those companies. So you had those, they want to fight the vision, as I explained, to avoid the spreading effect or the trickle-down effect in other geographies. And also when we talk about scope 3 of fossil fuel companies, it means you have to change your business. I mean, if you produce petroleum products and you need to be carbon neutral, you have technological means, but it won't suffice. You will have to divest to change your business if you want to be compliant. Then, so it's existential. Then you have those who were taken between the US administration telling them you can't comply and their wish to actually do it by the rules, even they didn't like it in full. And then I've met some of them, and they told me we need to scrap what's in the EU law, because we can't be in between. And of course, you try to be a bit friendly, but I reminded to many of them that they were the first to call for full reopening and a full simplification exercise. And now they ask for legal certainty and a safe harbor. So it's a bit also hypocrite in some way, but in politics, it's not really what matters. You have many short-term views as well. And then you have something I've never seen, which was really new, which is the way the vested interest against those two directives were organized. And they anticipated quite a lot in terms of aligning the messages, aligning who to meet, when to meet, how to have access to the documents, and also created some proxy lobbies, some kind of consulting firms or organizations, and which on the facade really looks like everything normal, everything balanced, but when you look under the surface, you can see it's only American companies. And this I've never seen. I've seen many individual US companies. I've seen the US Chamber of Commerce you mentioned, but everything was with high level of transparency. Let's say we knew that that was their line. We knew from their direct consultation which are transparent, but here it was really different. There was no announcement of what was behind, and this is really an evolution in the European lobbying. And I've been in the bubble since more than 15 years on both sides of the fence, and that's really something that I actually didn't see coming, even knowing the power of the fossil fuel industry.
And for any of our listeners that want to follow them up, we've had special, frankly speaking, podcasts on the lobbying around the Corporate Sustainability Due Diligence Directive, on the Social Lobby Map project with Peter Webster, and we also had Alberto Alemano from the Good Lobby. So feel free to listen back to those. If you want to see the leaked documents that show that covert lobbying by US companies, alleged, then that was produced by the Centre for Research into Multinational Companies, Somel, based in the Netherlands. Michael, I look at due diligence in the US, and I see a country that is the most enthusiastic of anyone on the planet, because I look and see what the Trump administration has brought in terms of requirements to combat forced labour in the Xinjiang province of China and elsewhere in China, where they are requiring companies to bend over backwards to demonstrate that they're not having forced labour implicit in their supply chains. The administration at the moment is looking at using what are known as Section 301 investigations to apply this even more stringently, and it's just agreed trade agreements with Malaysia and Singapore with very stringent due diligence requirements against forced labour from China. Now, we know that is partly ideologically motivated in the US, and it's certainly motivated by US trade interests, but it does seem, if we're to use the word hypocrisy, which I don't often use, but Abrial just has, where it suits US interests, due diligence is the best thing on earth. So what should we understand from that?
I think take away that hypocrisy is not only always been rife and rampant in politics, and especially in international or foreign policy and sort of economic relations. But I think we've reached perhaps a new high. But just let me mention, I stumbled across in my research on CBAM that the first proposal for a border carbon adjustment or a border tax adjustment related to climate and energy measure, ironically, was proposed by the Clinton administration back in 1993. The BTU tax, which was their response to both raise revenue, right, increase mineral oil taxes, but also respond to the recently signed and ratified UN Framework Convention on Climate Change. It bombed, it tanked, like every climate measure in the legislature, more or less. It failed to pass. Passed the House, didn't pass the Senate. Guess who was the biggest critic at the time of such a border measure, right, related to, well, it was the EU. So you see these kind of, for me, what you just mentioned with human rights, I do not for a second believe that there's really sort of genuinely idealistic motivations behind this. It's all about the showdown between the currently largest economy and what by many actually say, if you appropriately account for a different level of per capita GDP, et cetera, already perhaps the largest economy in the world, China, and its ascendancy, which is fundamentally reordering the global distribution of powers, the formerly unipolar world. And so everything that the US can do to rein in China, and if it is due diligence, they're using. Again, of course you will find NGOs, of course you will find well-intended people who genuinely believe it's important to push for that. But the actual thrust to me, just like with the CBAM, for instance, is less, to make sure that we decarbonize fast. It is the concern about the competitiveness, the level playing field, how our companies, whether it's the EU companies covered by the EU ETS, whether it's US companies covered by a number of rules, how we can level the playing field or tilt the playing field somewhat in our favor. I think the US plays the game a lot more brazenly. I think the EU is much more, like with the CBAM, you can make a much stronger case that they actually have also genuine sustainability, etc. interests. I say that without necessarily, well, there's a normative judgment in that, but the US is at the same time more powerful, and it can wield that power, I think, in a clumsier way and still get away with it.
Michael, a lot in that last answer was about geopolitics, and you've written and spoken a lot about geopolitical fragmentation and what you see as dangers in that. I saw you wrote once that we could all maybe be presaging the run up to World War III, which is a real doomsday scenario. But I think many of our audience understand the dangers in the current geopolitical climate. Give us a bit of optimism. What's still, somebody focuses on climate and environmental policy. You're not an activist, you're an academic, but what makes you optimistic still, or hopeful still, given that you're practicing this field?
So, out of cynicism, I think over 25 years working on climate, I've come to sort of, in a resigned way, defeatist way, almost acknowledge that in the end, when you look under the surface and you look at the naked economic interests and the geopolitical sort of dimension of things, it explains a lot. The US, as we all know, is the historically largest oil and gas producer in history ever, right? More than Saudi, more than Russia. A lot of jobs, a lot of investment, a lot rides on that. And so, of course, that will influence its politics. The EU is in a very different situation. It's energy import dependent. The quicker it can get rid of fossil fuel dependency, the better for its security, the better for its trade balance, et cetera, et cetera. So, of course, that explains a lot in the differences on the speed and consistency and long-term sort of action on sustainability, decarbonization, et cetera. So the politics to me is difficult. They work in the EU, but the EU, unfortunately, cannot solve it for the world. The US is much more complicated. And as we've seen, flip-flops time and again. And it's just not, you cannot expect the US to move with the speed we need. The EU's efforts on using its market access, right? Its access to its market to leverage action elsewhere have actually been some of the most powerful levers in years to prompt action where it really matters, which is in the developing world where emissions are still rising and a lot of these environmental impacts are occurring. So in many ways, I don't want to see that being sacrificed, right? There's questions about the speed, the burdens associated with that, and how we can kind of make sure that it is also politically durable and can withstand the onslaught of other geopolitical actors that don't see it in their interest. But here comes a bit of optimism. At this point, China, which supplies 70 to 90% of all clean technologies being deployed around the world, especially clean energy, but also electric mobility, a lot of the components, the critical materials, etc., it is very strong. It's not only the largest emitter, of course, but it is now clearly very much in its economic interest to have the global transition continue, at least when it comes to sustainability and especially carbon emissions. And that gives me hope, because even as the US and the EU are kind of trying to protect their economies, both sides, not just the US, also EU, protect their producers, make sure its manufacturing survives, et cetera, reshore, localize production and so on. China is dumping this stuff into the rest of the world. And that means in sub-Saharan Africa, in South Asia, in Latin America, most of the new electricity generation is clean. A lot of the new mobility is clean. So again, it's naked economic interest. And I think China, this is one of my more optimistic scenarios in the paper just referenced, is one where China sees, well, it's in our economic interest, and we can now sort of fill a political vacuum in a now multipolar world where there's no one clear leader, and sort of be responsible citizens while also gaining economically from selling our products. It's not the nicest scenario if you're a European company or US company, certainly not. But for the climate, for the environment, this is an optimistic outcome. So let's see.
Fascinating answer. Abrial, you have been living and working this brief for some years now. What makes you optimistic and hopeful at this point?
I can see that the overall vision has not been sacrificed yet. And I don't think it will. And I think the very fundamental elements that you mentioned about energy security, dependency, and so on will remain. So I anticipate a change of behavior vis-a-vis other trade partners on how to implement those rules with extraterritorial reach. And I think we should not be shy about it, because what we need is actually a rule that actually function and not being opposed. And we see the very bad effects of the backlash, how it can impact the actual regulatory system. So we need to be much more pragmatic vis-a-vis the rest of the world without sacrificing the vision. And I can see that within the Commission, it seems, and in some member states, seems to be alike. And I would say that even though there is a huge decrease in terms of the scope for the CSRD or the CSDDD, but for other regulations, to some extent, at least when it comes to corporate reporting, I think the market, at least in Europe, will continue and will continue to do it on a voluntary basis or start to do it on a voluntary basis. And by the way, many companies did not wait for the ESRS's, European Sustainability Reporting Standards, to start reporting on impact. You had GRI, you had the UN process, and so on, and many different way of reporting on your corporate sustainability. So yeah, I think the market will, to some extent, continue to catch up, and I hope it won't be too slow. That's why we continue to need regulation to set the political path vis-a-vis the urgencies of our world. So I'm not that pessimistic anymore, but it doesn't mean we should not start fighting.
In this podcast, we've heard that arguments between Europe and America on these issues are not new and date back to the Clinton administration and arguments about the emissions trading scheme. We've heard that sovereignty is at the heart of the set of arguments and is a particular defence probably in Europe against too great a retreat on these issues. Americans will flip that argument exactly the other way. We've heard in what's in the US trade agreement there's a degree of constructive ambiguity, giving some wriggle room about how it is interpreted in terms of the European Sustainability Directives. We've discussed that the guidance that will come, on time, delayed, complex, simplified, will be the mechanism by which this is probably going to be played out going forward. We've heard from both a European and a US perspective that there are multiple business audiences out there. This isn't a question where businesses can all be put in one bag. And we heard from Michael the real importance of geopolitics in all of this. And that very interesting argument at the end that in Europe and America there's a bit of a disjunction between politics and economics, but in China there very much isn't. And that may well have a big influence in the way that climate and environmental issues take place, go forward in the world as a whole, probably a challenge to Europe and America in that answer. And we heard in his last answer from Abrial that he thinks that the vision of why these directives were first formed is still there, and he's expecting many companies to continue to apply the provisions whether they fall out of scope or not, because he believes that they are in the business interest, as indeed many of our listeners do. Sadly, we have come to the end of our podcast, so to Abrial Gilbert-d'Halluin and to Michael Mehling, thank you so much for joining us.
Thank you, Richard.
You've been listening to Frankly Speaking, the Frank Bold podcast on responsible business. Find out more about Frank Bold's Responsible Companies section on our website, and please give us your feedback on this podcast episode on our LinkedIn page or by commenting via your podcast provider, where we hope you will also share the conversation and give the podcast a 5-star rating. And remember, you can now watch us on our YouTube channel too. Thank you again to Abrial and to Michael and to all of you for listening. Do join us next time. and goodbye.